Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Monday everybody. I trust you had a restful weekend and as always have a productive week ahead. For today's video we are going to do something a little different. We're going to do a deep dive into a topic which we have been following for some time, but which is increasingly receiving a lot of international attention. China's growing global presence in the production of electric vehicles and electric vehicle batteries, critical future industries. This story is important to follow. It touches on international supply chains and markets, technology, and of course has emerging geopolitical elements too. Indeed, Canadian Prime Minister Justin Trudeau recently said, in criticism towards Chinese labour and environmental conditions, quote, "Lithium produced in Canada is going to be more expensive because we don't use slave labour," end quote. Of course, the statement was met with an angry denunciation from Beijing, but what is important to note here is that it was said to a business crowd in New York, suggesting that there is increasing political will to build up native lithium and EV production industries in North America, in part based on restricting Chinese inputs. If this is the case, however, China already has a head start, and today's video is going to look at just that. Several years ago, Beijing identified EV and EV battery production as a strategically important industry, and as such poured billions of dollars worth of subsidies and supportive measures into supercharging the industry. And these efforts continue in earnest. In a sweeping guideline released by the National Development and Reform Commission just a few weeks ago, China plans to encourage wider use of electric vehicles in rural areas through the building of better electric vehicle infrastructure and rolling out support measures for farmers to purchase new energy cars. Of course, this has already been happening in urban centres for several years now. In both its domestic market as well as international sales, Chinese-produced cars are challenging traditional industry leaders. Japanese financial media outlet Nikkei Asia reports that China's automobile exports generally have surpassed Japan for the first time, with this dethroning being driven by the growth in EV exports. According to the China Association of Automobile Manufacturers, China's automobile exports for the January through March period jumped from a very low base, 58% year-on-year, to 1.07 million units. According to the Japan Automobile Manufacturers Association, the land of the rising sun exported 950,000 vehicles during the same period, up 6% on the year. This regicide could mark a historic shift in global automobile production, and it is not just Japanese automakers feeling this challenge to market shares, both internationally and within China, the world's biggest vehicle and electric vehicle market. European and US car makers are too. This month, US automobile giant Ford announced that it is scaling back China investments, perhaps in part due to political concerns, but also, the company frankly admits, because they can't compete with local EV brands. Ford CEO Jim Farley, in an interview earlier this month, said that his company will put less capital at risk by focusing on commercial vehicles such as delivery vans, and will use the market as a listening post to help it better understand battery technology. Adding, quote, "If you just reinvest in a new cycle of EVs in China, there is no guarantee or no data that would suggest the Western companies win. The winners in China in EVs turn out not to be the traditional car makers, but actually all the EV brands like BYD and Tesla, Great Wall, SAIC and Changan, who are winning," end quote. The traditional European car makers are also seeing real competition in the massive domestic Chinese EV market. In a move which may cause political friction between Washington and Berlin, UK-based financial media outlet The Financial Times reports that German carmaker VW has engaged in conversations with Huawei and other Chinese technology companies over the use of its technology in VW vehicles, as, quote, "the German company faces an increasingly competitive market in China," End quote. And BMW AG has also announced this week that it will begin producing its next generation of new class line of electric vehicles in the northeastern Chinese city of Shenyang from 2026, once again in the hopes of getting a stronger foothold in the world's largest EV market. The new class EVs will be made by BMW's China joint venture, BMW Brilliance Automotive Limited, BBA. In its statement, BMW announced that it will also create, quote, an entire electromobility ecosystem in China, spanning research and development, the supply chain and production of batteries and electric vehicles. End quote. Gone are the days when European car makers would do all R&D back in their home countries and sell older models to the Chinese market. China consumer preferences are now driving automaker decisions to a much larger degree. BMW also announced $1.4 billion of investment into a new factory in China to, quote, manufacture high-volume batteries for the new class EVs in Shenyang, end quote. And this brings us to the industry where Chinese production is truly performing: EV batteries. In a widely read article from US-based New York Times called "Can the World Make an Electric Car Battery Without China?" the outlet argues, quote, despite billions in Western investment, China is so far ahead, mining rare elements, training engineers, and building huge factories, that the rest of the world may take decades to catch up, end quote. According to estimates from Benchmark Materials, a consulting firm, even by 2030, China will make more than twice as many batteries as every other country combined. Adding in a recent report, quote, electric cars use about 6 times more rare materials than conventional cars because of the battery, and China gets to decide who gets the materials first and at what price, end quote. The most important component is the cathode, which is the battery's positive terminal. China has invested in a cheaper alternative that has now taken half of the cathode market. According to analysts at People's Bank of China International Co. Limited, in a December 2021 report, quote, as early pioneers of LFP technology, Chinese firms were able to rapidly lower production costs, with battery costs falling 88.5% during the decade to 2020. End quote. And some Western commentators are concerned too. Quote, there is no way anyone is going to become successful in electric vehicles without having some type of cooperation with China, either directly or indirectly. End quote. Of course, this is something that policymakers and politicians in Washington are not going to stand for. Lithium is becoming big business and a new global player in the global commodity game. The United States does not want to rely on China for its EV battery materials, so bringing lithium and other material mining to North America is a national security priority. UBS analysts say that the Inflation Reduction Act of the US, quote, has the potential to make the United States a global EV battery hub, end quote. Adding, quote, the US administration obviously considers EV batteries as the oil of the 21st century and is willing to pay a price for energy independence, end quote. These massive geopolitical and market shifts present challenges for policymakers, but also huge opportunities for savvy investors. The International Energy Agency forecasts that soaring EV battery demand will require 50 new lithium projects by 2030 in North America, and there is currently only one in the US. Lithium could be the trade of the decade, especially in North America. And today's video sponsor, FE Battery Materials, is an attractive option in that trade, making a great addition to any well-diversified portfolio. FE Battery Metals Corp is focused on identifying, exploring, and advancing early-stage lithium pegmatite projects in Canada. The company boasts over 60,000 acres of land holdings in Quebec, along with other exploration projects located through North America. Their geologist was the 2020 Yukon Prospector of the Year award winner, serving as project manager on previous successful explorations. One sold to Kinross in 2010 for $139 million. FE Battery Materials' Augustus lithium project is set up to drill right next to the #1 lithium producing region in North America. To date, with already over 8,000 meters of drilling complete, there is huge potential for encouraging results, creating shareholder value through a potential buyout or merger. So if you're interested in the potential trade of the decade with lithium in North America, check out FE Battery Materials. We remember that all investments involve risk. This is not individual investment advice. Always speak to an investment professional before making any major investment decision. A big thank you to FE Battery Materials for sponsoring today's episode of China Update. Okay, now moving back into regular content, let's continue with our exploration of Chinese EV battery production. Chinese battery makers are becoming increasingly competitive in overseas markets too. My apologies, they just started construction next to my office, so I've moved to a new location. According to a report released this month by South Korea-based SNE Research, during Q1, leading Chinese battery makers supplied 29.6% of batteries used for electric vehicles in non-China markets, up 6 percentage points year-on-year. Chinese supplier BYD, which is one of the world's leading EV makers, use of its batteries in non-China markets jumped nearly sixfold, increasing its global share to 1.7%. BYD is expanding rapidly into other areas in the EV race too. For example, BYD Senior Vice President Stella Li told an investor forum this month that between 4,000 and 5,000 software engineers have been recently hired to develop driverless car technology. South Korea remained the largest EV battery supplier in markets outside of China, but its top suppliers saw their combined market share drop 5 percentage points to 49%. Japanese players were down 1.5%. Chinese financial media outlet Caixin writes that Chinese battery makers have accelerated their expansion overseas too. Quote, eyeing business opportunities in the US and Europe as governments encourage the electrification of the auto industry. End quote. So, is China racing ahead to dominate the world in EV production? Is it over for everybody else? Well, we should be cautious before jumping to these sorts of conclusions. First, Japanese, South Korean, American, and European players are still very much in the EV fight. Second, Chinese players enjoy the world's largest EV market. However, they are also increasingly reliant on foreign markets, foreign capital, and key imported inputs and technology, like semiconductors. If the global geopolitical environment continues to deteriorate, then Chinese automakers may see themselves cut off from one or all of these. And third, Chinese players are supported by massive government subsidies, both in terms of production subsidies on the supply side, as well as final price subsidies for purchases of the end vehicles on the demand side. As Beijing and local governments struggle with surging debt and fiscal deficits, it is hard to know just how long these generous subsidies will remain in place, and if they are scaled back, just what the effect for the industry will be. There are a lot of questions remaining, and of course there are many moving parts, from the US-China technology war and wider competition, to domestic policy, to local government fiscal health. This is why here on China Update we continue to follow major salient Chinese developments at the macro level, with daily developments punctured with the periodic deep dive. EV production is a critical global industry to follow as we move through a period of interesting times, and we will continue to follow it here on China Update. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Tomorrow we will be back with a regular episode. Have a wonderful Monday wherever you are, and I will see you all tomorrow.